Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly economic review for the week ending September 15, 2023. Time flies. A look at this week's markets at the close on Thursday to get started here. The highlight of the week is that oil prices are still up. The pressure is on 3% higher. The index that benefits the most from that is the TSX. We also mentioned a few times in the past 2 weeks that we put a few trades in long commodities, short US equities, long the energy sector, short technology. So all of these trades are also benefiting from that. But what is not benefiting clearly is bonds, because this brings inflationary risks back on the table. So pushing interest rates higher. But TSX had a strong week. Price of oil was the leading factor here. The CAD appreciated by about 1% on the week, euro down, and the price of gold down again by 0.5%. So ECB will be the first topic here. The European Central Bank hiked again, but pretty much announced a pause. So they do recognize that they might have to hike again, if conditions deteriorate further, if inflation is more sticky. But they think that for now it's time to hold rates high for a while and let that run its course. The European Central Bank is facing a weak domestic economy, especially in Germany, which is pretty much officially in recession already. We see that inflationary pressures are more vivid over there because there's more imports of oil, so they're more sensitive in Europe to the moves of global oil prices. So it's not an easy task, but when you look at all of the central banks, the major ones, of course, the Fed comes first, after that the ECB, then the Bank of Japan, Bank of Canada. So you're starting to see that we're pretty much at the end of the hiking cycle. There's always a risk that we have one more hike depending on what happens with the stickiness of inflation, but one more central bank, maybe that moved sideways. Next week we'll have the Fed. The consensus is that they don't hike. Will they announce something that sounds like a pause? We'll see. But we're clearly towards the end of this hiking cycle. Now, maybe focus on oil. Oil prices are rebounding. This is adding a layer of uncertainty. And we look at this chart here. You see we're clearly not at all-time highs. We're not even close to where we were in 2022. But now it's mostly about the supply. We've seen that during the pandemic, there was some underinvestment in supply capacities, leading multiple observers of the oil market. I'm not one of them, but I read what they write, and leading them to think that we should see oil prices being sustained for a good while now because of this imbalance between supply and demand. So the recent rise in oil prices also has to do with OPEC Plus deciding to keep some production cuts in place to keep prices higher. So there are two consequences to that. First, this is a tax on the global economy. If you're a household and you put gas in your car, you don't get better gas, you don't get more gas, you just pay more for the same thing. So it pierces a hole in your pockets and you have less money to spend on other things. So this is a headwind to growth. Same thing for businesses that use oil as an input. Well, you still produce the same thing, it's just your cost of energy goes up. So you have this detrimental effect to real GDP growth coming from this, but you also bring back on the table inflationary risks, and it brings a big question mark to what central banks will do. Will they react to that, or will they fade it? It's a very important question. When you go to Canada here in these charts on the left, you see this is the year-over-year growth in gasoline prices. You see that in 2022 we were at 50-60%, so that was very inflationary, brought inflation high as 8% plus. And the quick fall in inflation that we've seen over the last year was caused, of course, by the price of gasoline falling, and at some point we had deflation in oil reaching about 20-25%. So that brought total inflation from 8 to 2 point something percent. But now we're on the upswing again, so this should bring inflationary pressures back. Moving us to the chart on the right, as you can see, the transportation part, the red area in this chart, is mostly gasoline prices, and also you have car prices in there, but it's mostly gasoline prices. You see, this is the volatile component. Food, shelter, inflation are slowly subsiding, very slowly, but they're more stable. But now you should expect the red part to become positive again and bring inflation back towards 4% plus by the end of the year. So will the Bank of Canada react to that? Likely not, but still they have to at least acknowledge it. And you never know when prices in inflation coming from gasoline will spread to other components of the economy, because it's such an important input to the economic function. So this is bringing some uncertainty. We'll see where we end up. We still think central banks are likely done or almost done here, but this is pretty much all another headwind to the thesis that we're just about to hit a soft landing and get back from there. So that was a little story here on oil and gasoline. So what to watch next week in Canada? We'll have housing starts. We'll have the CPI inflation report, very important report. We'll have retail sales in the US. We'll have building permits, housing starts, and the highlight of the week will be the Fed decision. No change is expected. Let's see if the consensus is right. This is next Wednesday afternoon, 2 p.m. Eastern time. We'll get that decision. So that wraps it up for the week. ia.ca/economy. You'll find this review, you'll find the podcast. I swear, Economy Finance 101, so lots of material is in production now, so it's going to be launched soon, and also on social media you can find us there. iagam.ca/insights on the right. This is the webpage for IA Global Asset Management. My co-PMs, my colleagues in the investment department publish material there, and our team will publish the Macro and Strategy Monthly, which is a more deep dive take on our views on the macro and the market. So I strongly encourage that you give it a look if you're interested in learning more. So that's it for this week. Always a pleasure to serve you, and I'll be back again next week.